Okay, so as I was saying, my name is Florian Grosset. I am a PhD candidate at Columbia University. And so in this paper, we look at redistributive arrangements. We know that those redistributive arrangements are widespread in lower income countries, and they have traditionally been understood as reflecting informal risk sharing, and therefore as being welfare improving. However, if the transfers are triggered by increases in effort rather than by idiosyncratic shocks, then those redistributive arrangements can induce distortions. They can come at an efficiency cost. They will act as a social tax on workers' earnings, and this can basically act as a social tax and reduce their labor supply. So in this project, we want to provide some novel causal evidence on the distortions of labor supply induced by those redistributive arrangements. We work with full-time piece rate factory workers in Côte d'Ivoire. Because they are paid piece rate, there is a direct correspondence between the earnings of between the effort of the workers and their earnings. And in the study setting, the workers report having very high pressures to share income gains from their efforts. So what we could do could be to lower the social tax on earnings that workers are facing. But if we were to do so, we would have opposing income and substitution effects so that the interpretation of the resulting coefficients might be ambiguous. So what we prefer to do in this context is to lower the social tax on earnings increases only. So basically, we reduce the tax rate on the earnings above the baseline level, Y1 in this graph. And the way in which we do that is that in the first phase, we offer to a random subset of workers a blocked savings account in which any earnings increases above the baseline level can be directly and privately deposited into an account and locked away for a given amount of time. And then to get at the mechanisms and to demonstrate that the effects are indeed driven by redistributive pressure, we also vary in the second phase whether the accounts are offered privately, so whether basically the existence of the account is kept private, or whether the network members of the workers would know by receiving some text messages of the existence of the accounts and of the existence of the savings of the accounts. So what do we find? We find that workers value the accounts when they allow them to shield their earnings increases from redistributive pressures. We have a take-up rate of the accounts of 60% in the private treatment arm. And we find that workers really value the ability of the accounts to shield those earnings from redistributive pressure, meaning that when the network members would know that the savings are available, so the accounts are not really useful anymore to shield earnings increases against the pressure, then the take-up plummets to 14%. This translates then, consistent with our prediction, in an increase in earnings and attendance of the workers. So we find a 14.5 intent to treat effect on earnings. And when we combine those point estimates with an additional piece rate variation exercise at the factory, we find an implied social tax rate of 18%. We can also show that the total earnings go up, and consistent with our design of just reducing the tax rate, the social tax rate on earnings increases above the baseline level, we find that workers keep the same amount of cash on hand, and there is no reduction in transfers to their kin. You might be thinking about some potential confounds, so very briefly to finish with that, you might be thinking that if workers don't take up the private version of the accounts, it's because of privacy concerns. Maybe they don't want others to know that they have an account or to know about their financial matters. But we find that actually in this context, workers agree and have a very high acceptance rate for us to send some other types of SMS messages, as long as those SMS messages are not inducing requests for transfers. We also find no evidence for moral effects. And maybe more importantly, when you think about blocked savings accounts, you are thinking about commitment issues, you are thinking about self-control. And so that's why we have this difference between the private and the non-private accounts. The self-control issues could not explain the difference that we observe in those two groups. And also we have an additional exercise when we directly surprise workers with the opportunity to opt out of the blocked savings for one pay cycle, and we find very few workers decide to opt out. And so to conclude, we find that redistributive pressure do act as a social tax, dampening the labor supply of workers in this setting. And it suggests, when thinking about social transformation, that tackling the root cause of those redistributive arrangements, meaning the lack of formal consumption smoothing mechanisms, can lead to increased productivity and increased output for the workers in the formal sector. Thank you.
Thank you, Florian. If anyone has any questions, please go ahead.
Yeah, Florian.
Yeah.
I guess what interests me about this sort of stuff is, what do you think policy-wise would be an implication of this? Like, how would you take these findings to something else?
Yes. So I think what we do not want to do is to suggest that we should work against those redistributive arrangements. Those arrangements come at an obvious welfare benefit. We are not saying anything about the net benefits of them. We are just pointing out and demonstrating that there are those additional costs. But rather, I think the implications is more when thinking about social protection, about social safety nets, that if workers do not receive as many requests for transfers because the others have some other place to turn to, so formal insurance mechanisms, be it from the private sector or from the state, this could reduce the pressures to share. So I think that's more where we are going with this policy-wise.
Nice, thanks.
I don't know if you have other suggestions on how to push it also on the policy side.
Are there any further questions? Florian, I don't know if you want to expand further on anything if there are no specific questions being asked to you.
Yes, let me think what might be the best here. So I think some of you might be a bit curious about this like publicity or privacy variation that we have. I know that's a question that came up a lot. So basically what we do is at the time at which we offer the accounts, so to some workers, we offer them the private version of the accounts. And then to some other workers, later on, we come back by saying that there is this publicity program, which is true. Basically, the bank was trying to expand in those rural areas and to expand its consumer base. And so they were usually basically texting people and sending them publicity messages to say, we have those new types of accounts, come and join us. And so in this case, we told some of the workers who got offered those types of accounts that if they were to take up, they would be basically integrated in this publicity program. And so if they were to achieve savings with those accounts, then a text message would be sent to members of their communities saying that they had achieved savings with those new types of accounts, basically. And we piloted it obviously very carefully to make sure that it was appropriate and adequate in the study settings. And interestingly, we find that workers are like no issue with the fact of us sending messages about their financial situations. They just had issues with us sending messages that would trigger requests for transfers.
Florian, would you just say a little more about the self-control results? I wasn't quite sure I understood how you're able to rule that out.
So basically, what we are doing is offering those blocked savings accounts, and people could think that those blocked savings accounts can be used by workers who have self-control issues in consumption. And so they prefer to lock away the earnings to not be tempted and to not consume immediately. But those self-control issues basically in consumption are something that you know about yourself. Like, you know, you might have those issues, and so you decide to opt in to use those blocked accounts. But then it shouldn't matter whether your network members know or not that you have those accounts. And so that's why we have this variation. Because there is this relatively large literature with, for instance, Pascaline Dupart and her papers on those locked savings accounts that people are using more for self-control purposes.
I guess I just have in my head, and maybe I'm just confused in my thinking, that part of the self-control issue is about pressure from one's family and community. That the reason I don't trust myself is that if I have money, I'm going to be susceptible to demands from others. But it's not clear those are completely different things. Or do you know what I mean?
Yeah. So basically, in our mind, if those requests are not desired, so you have two things when you have requests for transfers. It can come under altruism, So we might value that, and then it's not a tax, and it doesn't distort your labor supply decisions. But then if those requests are not desired, and if they're not entering your utility, or at least not enough, then basically we call that the redistributive pressure or the social tax.
Got it.
So what we're looking at is exactly the thing when you have a bit of pocket on hand, then your neighbors might come and ask you for a bit of money. And even if you say, I'm saving for something big later, like to start a business, a lot of women in our sample are saying that they're saying, like, I'm going to the factory to work for a couple of years to save up and then to open my own shop. But then the neighbor comes or the distant cousin comes and is asking them, no, but that will be in 2 years, just give me a bit now. And that's why they don't manage to save. While with those accounts, when they save up for the standard period is 9 months, then after the 9 months, usually they have enough to start a business. And then they can basically invest. So for self-control, I should be explicit that this is more to get at self-control in self-consumption, basically.
I mean, just anecdotally, the other thing that I think you observe quite a lot is for self-control, that the technology people use is to purchase highly illiquid assets and to turn cash into bags of cement or bricks or things that they immediately turn a little bit of cash income into something that's illiquid that can't be shared with the community. But I think that's a really interesting thing to work on.
Yeah, exactly. So basically, the design for this came from discussion with workers, but also from anecdotal evidence. Also, for instance, in some markets, you have people who are just collecting money and keeping it, and you have to pay a fee, and then you can retrieve it later. So what we're doing here is basically to formalize this with a formal bank, with less safety issues and things like that. But yes, this evidence is definitely an inspiration for us. And our goal was more to provide some causal evidence on their effects, I would say.
Thank you.
Yeah, thank you.